Hello, and welcome back to Boss Economic World, the show that peels back the spreadsheets to find the story, and translates the jargon that puts you to sleep into the drama that keeps you awake. Today, we're heading to rainy old Blighty, the United Kingdom, where the political weather is, shall we say, a little turbulent. It's November 4th, 2025, and the newish Labour government is gearing up for a budget showdown that could make or break its time in power. Imagine you're a tightrope walker. On one side, you have the screaming crowds demanding you do more flips, more tricks, more dazzling feats. That's the public, wanting lower NHS waiting lists, help with the cost of living, and a pony for every child. On the other side, you have the stern-faced circus owner, let's call him the market, tapping his watch and checking his accounts, warning you that one wrong wobble and he's cutting the safety net. Our tightrope walker, in this thrilling metaphor, is Chancellor of the Exchequer, Rachel Reeves. And for the past few months, everyone, from the pinstriped prophets in the City of London to the armchair economists on Twitter, has been saying she's about to take a spectacular tumble. They've been screaming about a massive fiscal black hole, a gaping chasm in the nation's finances that would force her into some politically suicidal decisions. The estimates were terrifying, ranging from £25 billion to a whopping £40 billion. That's not a hole, that's a canyon. But then, just this morning, a little ray of sunshine pierced through the London gloom. The Resolution Foundation, one of the UK's sharpest economic think tanks, dropped a pre-budget bombshell. They've run the numbers, and they're saying, hold your horses, everyone. The black hole? It's more of a pothole. According to them, the actual fiscal deterioration since March is only around £14 billion. Now, don't get me wrong, finding an extra £14 billion down the back of the Treasury sofa is no easy task. That's still more than the entire GDP of Iceland. But compared to the £40 billion apocalypse that was being predicted? It's like being told you need a triple heart bypass and then finding out it's just a nasty bit of indigestion. So, the big question is, where did this magic money come from? Did they find a pirate treasure chest under the Houses of Parliament? Did they finally invoice America for the Beatles? No, the answer is far more interesting, and it reveals the fundamental, twisted paradox at the heart of the UK economy right now. The savior, the knight in shining armor riding to Rachel Reeves's rescue, is wage growth. Yes, you heard that right. People are getting paid more. Boosted by the stubborn inflation we've all been enjoying for the past few years, pay packets have swollen. And when pay packets swell, what happens? The taxman gets a bigger bite. The Resolution Foundation estimates that because wages are so much higher than the official forecasts predicted, the Treasury could rake in an extra £13 billion in tax revenue by 2030. This is the good news part of our story. It's a fiscal get-out-of-jail-free card, a temporary reprieve. But here at Boss Economic World, we don't just look at the silver lining, we analyze the cloud it's attached to. And this cloud, my friends, is dark and stormy. Because why are wages going up? Is it because British workers have suddenly become paragons of efficiency, innovating and producing at a blistering pace? Oh, you sweet summer child. Of course not. This is the UK we're talking about. The wage growth is almost entirely an inflationary illusion. It's like getting a 10% raise when the price of a pint has gone up 12%. You feel richer for a second, until you try to actually buy something. The real story, the one that should be keeping the Chancellor up at night, is the other line on that graph, productivity. Productivity is the secret sauce of any successful economy. It's about how much value you can create for every hour you work. A baker who can make 12 loaves of bread in an hour is more productive than one who can only make 10. That extra efficiency is what generates real, sustainable wealth, funds public services, and leads to genuine increases in living standards. And the UK's productivity? It's in the toilet. The Office for National Statistics just released figures showing that public sector productivity, the efficiency of things like the NHS, schools, and government departments, was 3% lower in 2024 than it was in 2019. Let that sink in. After all the talk of building back better, of a high-wage, high-skill economy, the engine room of the state is actually less efficient than it was before the pandemic. Healthcare productivity alone fell 1.5% in the last quarter. We are literally paying more people more money to produce less. This is the UK's economic sickness. It looks like a healthy, muscular bodybuilder because of the swollen wage numbers, but underneath it's just bloated, weak, and out of breath. The wage growth is a painkiller that masks the symptoms of a chronic disease. So, Rachel Reeves is standing on her tightrope, having been handed a slightly better balancing pole than she expected. But the rope itself is fraying. This is the context for the drama that will unfold on Budget Day, November 26. The Resolution Foundation isn't just pointing this out, they're giving her a whole playbook. And it's a playbook that confirms every fear the British middle class has ever had. Their core message is this: don't just patch the pothole. Rebuild the whole road. And make it a toll road. First, they say she should be more fiscally conservative, not less. They want her to double her fiscal buffer, the emergency cash she keeps for a rainy day, from around £10 billion to £20 billion. Why? To send a clear message to the markets. This is code for show the bond vigilantes you're one of them. A bigger buffer means lower borrowing costs in the long run, making future budget crises less likely. It's the sensible, grown-up thing to do. It's also politically excruciating. To do this, and to fund some other changes they propose, they've calculated she needs to find £26 billion in tax increases. Remember, this is a chancellor who stood up just last year, raised taxes by £36 billion, and effectively said, "That's it, folks. No more." Now, her own advisors are telling her to come back for another, even bigger bite of the cherry. With Labour's polling numbers already at an all-time low after a difficult first 16 months, this is what politicians call a moment of maximum danger. So where does this £26 billion come from? The Resolution Foundation has laid out a veritable buffet of tax hikes, designed to be fair but guaranteed to infuriate someone. 1. The stealth tax supreme. First on the menu is freezing income tax thresholds for another 2 years. This is the government's favorite magic trick, known as fiscal drag. They don't announce a tax rate hike. They just quietly fail to increase the salary level at which you start paying more tax. So, as your inflation-driven pay rise pushes you into a higher bracket, the government's tax take goes up without them ever having to say the words, "We are raising your income tax." It's projected to raise a cool £7.5 billion. Sneaky, but effective. 2. The professionals and property platter. Next up, they're targeting lawyers and landlords. They propose a 2 percentage point hike in income tax for this group, but cleverly offset it with a 2-point cut in national insurance. This is a targeted strike, designed to hit those with high non-salary income, raising £6 billion. 3. The investors' indigestion. For those who make their money from money, things are about to get less comfortable. The proposal is to raise dividend taxes and close loopholes in capital gains tax. This tackles the age-old debate: why should someone who earns £50,000 from a salary pay more tax than someone who makes £50,000 from selling stocks or property? This move would aim to level the playing field and could raise £7 billion. Expect squeals from the wealth management industry. For the small business squeeze, they also suggest lowering the threshold at which businesses must register for value-added tax from £90,000 in turnover down to £30,000. This drags hundreds of thousands of small businesses, freelancers, and sole traders into the VAT net, creating a huge administrative burden for a projected gain of £2 billion. 5. The posh postcode and petrol guzzler penalty. Finally, they suggest reforming car taxes and property taxes, likely meaning higher taxes for bigger, more polluting cars and more expensive homes. That's another £2 billion from each. You add it all up, and you have a package of tax rises that hits almost everyone: stealth taxes for the salaried worker, direct hikes for professionals and investors, more admin and cost for small businesses, and new penalties for homeowners and drivers. Prime Minister Keir Starmer and Chancellor Reeves are already trying to manage expectations, using the classic political phrase tough but fair decisions. What that really means is, this is going to hurt, but we promise it will hurt the people you dislike more than it hurts you. But wait, there's more. On top of this planned fiscal tightening, there are hidden landmines in the budget papers. The temporary 5p cut in fuel duty is due to end, and the duty is supposed to rise with inflation. Sticking to that plan would be political suicide, as petrol prices would soar. But cancelling it costs the Treasury £5 billion. Business rates relief for small companies is also ending, which is effectively a £1.7 billion tax hike on the high street. Reversing that costs money. This is the impossible equation Rachel Reeves has to solve. The short-term numbers look a bit better thanks to the fool's gold of inflationary wage growth. But the long-term picture, the collapsing productivity, is a 5-alarm fire. The Resolution Foundation's advice is clear: use this moment of relative calm to perform radical surgery. Raise taxes decisively, bolster your defenses against market panic, and use the money to tackle the real problems. They suggest using some of the cash to move climate levies off energy bills and to scrap the controversial 2-child benefit cap to tackle child poverty. This would be a decisive budget, they argue, shifting the national conversation away from black holes and back onto boosting growth. It's a bold, intellectually coherent strategy. It's also a terrifying political gamble. The Labour government was elected on a promise of change, of an end to austerity, of a brighter future. But the economic reality they inherited, a low-growth, low-productivity economy battered by Brexit, a pandemic, and an energy crisis, is forcing their hand. The budget on November 26 will be more than just a set of numbers. It will be the moment we find out what this Labour government is truly made of. Will Rachel Reeves play it safe? Will she use the slightly smaller than expected black hole as an excuse to do the bare minimum, patching things up and praying the economy somehow fixes itself? This would avoid a huge political fight but would leave the UK's underlying sickness to fester. Or will she take the Resolution Foundation's bitter medicine? Will she go for the big bazooka budget, raising taxes significantly to fix the public finances for the long term, fund public services, and finally start investing in the productivity-enhancing measures the country desperately needs? This would be a brave, legacy-defining move. It would also risk alienating millions of voters and potentially ending her political career. She's trapped between the rock of market credibility and the hard place of public opinion. Her balancing pole might be a little more stable today, but the tightrope is stretched over a political canyon, and the wind is picking up. the real story of this budget isn't about a £14 billion hole. It's about a choice, a short-term political painkiller, or a long-term, painful economic cure. And that choice will define Britain's economy for the next decade. And that, my friends, is the full picture.